All right, good morning, everyone. We are live. It is Fractional Friday. I got Joseph Cachapalia back, and welcome, man. It's been a few weeks. Yeah, I just got back from Japan, so let's catch up on things. How's everything going?
Going well, thanks. Yeah, happy to be back. I did not come back from Japan. I haven't gotten off my couch pretty much. So,
Well, that's the
that's what I
great
do.
thing about fractional real estate, right?
Exactly. I mean, that's the appeal for me, right? I mean, you don't have to go anywhere. So, um, it's one of several things I like about it.
So fill me in. What have I missed in the past few weeks? What's going on with fractional real estate and things like that?
Well, as usual, there's always some new issues going on Lofty. I feel like that's the one that's got the most news. They have the most active Discord. There's still the ongoing battle going on with that property manager Yom, where um, that's I think the thing that takes up the most bandwidth on everyone talking about over there, where they have a somewhat hostile transition away to other managers and whatnot, and arguing over funds, and so there's a lot of interesting stuff that comes out of that. Um, I don't know. Just recently did yet or 2 days ago. Actually, no, yesterday was dividend day on Mogul, so that's nice. I always do an update on how that's paying out and whatnot. And then there's I just always come across new platforms that I'm trying to keep track of, and there's stuff popping up all the time. I mean, it is there's it's just such an interesting space right now because there's a lot of players thinking about getting in, talking about it, doing different things. Saul's Lot's got some interesting stuff going on. They've got new DAX that paid out, so that's their. I don't know that we've talked about Saul's Lot. They're a little bit different from the rest of them, but uh, yeah, just all kinds of stuff.
Well, what is the difference then? What Saul's lot? I know I've heard you mention it before, but is that
Yep.
a newer one?
So yeah, that's much newer. I think they've probably only had 6 or 7 deals go through. I've bought 5, 3 of which have paid off already. And so, what you buy on their platform is what they call a digital assignment contract. I think I've talked to the founder there. I think he's super bright. He used to work, or I think he still actually has a company that does wholesaling. And he's identified, there's a lot of times where he'd talk to somebody who, you know, wholesaling their property wasn't really the right decision, right? Maybe they just needed a little bit of cash to get their property ready that they could list it for sale, or they just needed a little bit of cash for their life reasons, and while they waited for their property to sell. And so what he's done is created what he calls a digital assignment contract, where it is, instead of wholesaling your whole property, it's very similar to wholesaling a piece of your equity. And so you basically, as the homeowner, you can raise, you sell, instead of selling your whole property at a discount, you're selling a piece of your equity at a discount. And then us as investors get to buy into that at a set discount. Once they sell the property in real life, we get paid based on the actual value of the property, not the discount that we paid. And so it's a really interesting short-term equity position in the property. Has these aren't investment properties at all. It's almost always a vacant home that's getting ready to be put up for sale. Sometimes one that's already up for sale. And so I don't know, the ones I've had pay off already have been just unbelievably good um, annualized returns, because it's very short term turnover, and you get a set payout because your profit is based on the discount that you bought the equity for. And so I mean, that's a very, very rough, in a nutshell, description of the product. Um, I think it's kind of a good segue into like what we had talked about maybe discussing today, as far as you know on the platforms. Do you really have ownership? Is it just what are you actually getting, right? And on that platform, it's quite a bit different from a lot of the others, because it is just, there's no rents involved. You're not getting paid any rent or income. It is just but it is a true ownership position in their equity.
I think that's the one thing I keep hearing people mention to me is about like the ownership side of things. Are you really an owner in these properties that you're putting money into?
Yes, yeah. And the answer to that, and I know you had mentioned that, and it really varies um, from one platform to the next. But I think that, uh, and we can go through the major different models and talk about like which ones I think what benefits of ownership you get. But the answer, the real general answer is yes. I mean, you have but whenever people talk about like ownership of property rights, they always talk about your bundle of rights, right? Like, do you have the right to use the property? Do you have the right to rent it? Do you have the right to sell it? And depending on which platform you're talking about, you have anywhere from very a very limited type of right in the property, like on Saul's lot, right? Like you just have some um, ownership in the sale of the property. Basically, you get no control over that property. But then I think the one that you are most truly in the position of a owner is on Lofty. Um, but you're an owner with sometimes 100 plus other owners, and so all the decisions are made by voting. uh, there was an interesting situation that came up recently. This one's kind of fun, where one of the owners in one of the DAOs, because they're on Lofty, they're DAOs, the decentralized autonomous organizations, um, not the property manager of the property, but one of the owners was going to the property, um, without the approval of everybody else involved. The property manager, because we have a property manager that we use, uh, called the police on him because he's not, just because you own a piece of the LLC that owns the company, you're not necessarily supposed to be using the property. But the police showed up and said, "Well, wait a minute. If he's actually a owner in this entity, this is just a civil matter, right? He's not trespassing." And so um, that was a really interesting spot where they had to like, okay, we need to amend our operating agreement to make it clear that just because you own one small piece of this, you can't just stop by the property whenever you feel like it and use it for your own. um, I think that was a big hole in the way they had their operating agreements written. It was not the intention that you could use it, but it wasn't, you know, it just was arguable that maybe that was okay, maybe it wasn't. So I think they're fixing that. Um, but yeah, on that platform, you get a percentage of the cash flow. You get control as far as like I can propose anything I want that we do with that property, and then all the other owners with me vote on what we do. uh, we can sell those properties in real life, and if we do, I get a percent of the payout for that. That's been my dominant strategy on that platform. Is more than anything, I'm buying ones that I think are just not suited for being investment properties, but maybe there's a lot of equity in it based on the token price. um, and so, yeah, I mean, on that platform, I think it's the most clear that I'm truly an owner. I'm just an owner with 100 other people, and so we have to coordinate that, and it is messy. It's an interesting experiment. I'm getting close to saying I think that one's a failed experiment, but I'm not there yet. Uh,
Is there any way to like vet the other owners? Is like the platforms vetting these people that are investing?
Not at all.
No.
I mean, they do their like a version of like KYC, like know your borrower or whatever. So like they verify that you're a real person, and whatever they need to do as far as for tax purposes. But no, I mean, it is a free market. Anybody can go on there, buy into it. And I think the question is kind of motivated by what the real problem is on that platform. Is sometimes you own a property with a group of people that just have no idea about real estate investing whatsoever, or they have a very they have very so for example, there's one DAO on there, and now it seems like they're trying to do more, where we have an operating reserve. On most of the DAOs have operating reserves. This property has been doing well. The reserve got real big, and so a lot of times if you have too large of an operating reserve and there's no real reason to have it, they pay that out to owners, which is I think a perfectly reasonable choice. Doing that, they said, you know what, we've got a bunch of crypto bros in here. let's just take our operating reserve and invest in Bitcoin. Um, I happened to own that property. It was doing perfectly fine, but I don't think that that's a prudent decision, right? Like I don't want my operating reserve to be held in something that fluctuates so wildly, right? Like whether or not you invest in Bitcoin is a separate issue. Whether it's the right asset to have as your reserve for emergencies is I think, I don't want to have that be what I have to tap into if on a day that prices are down 20% or something. So, but that was the majority decision in that in that particular DAO, and now some of those people are moving into some of the other ones and trying to get them to vote the same way. So it is that's one of the things that makes me say, when I say like I'm close to saying it's a failed experiment. Like it is like herding cats sometimes, getting them to do things that make sense. So now don't get me wrong, there's some actually really bright investors on the platform as well. Some of the DAOs end up being really well run, taking properties that frankly I never would have thought would have worked very well, and like just executing a good business plan with them. Like we have these all these small multifamily in Albany, New York, that are run as, they're all on the same block and they're run as Airbnbs. And I think that in, you know 90% of operators' hands, those would not be profitable properties. But they're, the manager that we have there is also very active on Lofty, and I think he does um, he's really done something with those that, people, most investors would have failed with those. So I think, there's definitely a range. um but yeah, it is sometimes, sometimes I'll sell out of a property just because I think the other co-owners in that property have what I think is just a very wrong idea of the direction we should take. So there's one in particular I'm thinking of where it started off as a long-term rental. They decided to switch it to a short-term rental. So then, we raised money within the DAO, bought furniture, furnished it. It was running. Oh, and it turns out it's not legal to have it as a short-term rental. Nobody did any research on that. It just got voted. Everybody just assumed somebody else was in it. Now that happened before I actually bought into this one. So I'm those are the types of things I'm trying to more push, like for people to understand. And like, okay, let's not just, I don't know, I mean, we see a lot of that. But so then, okay, they converted that one to a midterm rental. um it would, based on the price point and the property taxes and everything, it just didn't make sense as a midterm rental either. It wasn't, it was, it barely made enough money after everything to pay the property taxes last year, which is not a great way to run a real estate investment. Um, I started buying into it because there's still a lot of equity in it to sell. And since like September or October of last year, we've been trying to get it sold, but there's so many differing opinions on the right way to do that. We went down the path of just trying to sell it to Open Door. Currently, it's listed on the market, but I mean, it took us 7 months or 6 months to get it listed, and and I think we kind of missed the window. It's not a great. I think we could have sold it 6 months ago for more than we could today. It's a market that's just has exploding inventory, and even with we're offering owner financing on it, and it still has a few offers, not a ton. So
I just want to remind everyone, Joseph has a YouTube channel, and he talks more specifically about the fractional real estate on his channel and more deals, and he brings updates. And so go check out his YouTube channel. Want to say morning to Val. A lot of people tuning in from the school community after Coach Carson's live with Michael Zuber this morning. We got Josh here, Flavio, Joe V. He says, "Yeah, I'm back from Japan." So we got Andy tuning in. Dylan's here. Dylan's also going to be trying to partner up with Cody Davis for Saturday accountability group, the Gen Z accountability group in school. And Charles is here. So Charles does say this guy is awesome. And I'm pretty sure he's talking about you, Joseph. So
oh, nice, thank you.
Charles is in school. Charles, yes, and I got your package, Charles. So next time I'll be sporting. He sent me Wally's coffee mug. Because he sees me always using the Bucky's one, so he wants to. He sent me some other gear and
That's
coffee.
why I used my Bucky's one today for the set.
Yep. See.
I
Oh,
got
okay.
I got the giant version. So.
I have that one also. Like I said, I spent like $300. Me and my son when we went to Bucky's. But Dylan also says yes. He loves Joseph's constant portfolio updates. They're fun to follow. So, do you have anything to share on screen today? Do you have anything you want to share? What you're working on, or
I hadn't planned to share
okay,
anything. I know we talked about. I think it's a good topic, right? Like, what do you really own on each platform? And so I thought, and is it just a gimmick? And is it, so I thought it'd be stuff we could talk about. I didn't necessarily think this would be conducive to like the
okay,
screen share because it's for most of them, it's like you have to actually dig into their operating agreements and their terms and conditions um, but I think it's something that is important because a lot of people think, okay, these are all fractional real estate platforms. They're all going to kind of work the same. And from the description of just from Saul's lot to Lofty, you can see like those are two completely different ownership interests. Um, the economic benefits are different, and I think that you had asked about Arrive too, so I thought I that's I think the most um, common model. So I thought we could talk about that a little bit.
yeah.
Uh, but
Would
yeah, I
you?
mean,
My one question would be though, would you recommend to someone stick with one platform first, or like kind of like you have a lot of time, like you said, on your hands, right? You're not
right.
leaving your couch. Would you be branching off and looking at multiple platforms at one time?
So I would tackle them one at a time. I think would make more sense depending on how limited your time is. My goal really jumping into these was to try to figure out as much as I could about the industry in general, try to share that as I go. I mean, I think I mentioned one of our early ones, because of my day job, I'm working with new investors on a regular basis. I was really looking for some place for people to be able to put money when they don't yet have enough to buy a whole property, or maybe where putting your whole life savings into one property doesn't make sense, you could spread it out, right? And so that's what got me really trying to figure out, what's the best platform. And in order to do that, you have to experiment with a bunch. Um, but over time, I realized like I never am going to have all my money on one of these platforms, right? Like, I mean, because you're adding a single point of failure if you do that. Um, even though I have ownership and distinct properties on each platform, it is um I still think you have some risk in that the platform itself goes down. And then you have like, so for example, in Lofty doesn't have any ownership in the individual property entities, but if they went down, coordinating a vote with the 100 other owners in my entity is going to be virtually impossible, right? I don't have their contact info. We do have a Discord, but you have just a small number of people in there. And so I think no matter what, I'll always, even if because I have serious thoughts about moving all of my capital into fractional properties at some point. I've got, I've talked about a lot of my money is just in private mortgages. That's what I had converted to over the last several years. I've got kind of a big one coming due, and when I get paid on that, I think I'll move most of it into fractional real estate instead of doing another mortgage deal. Um, but at the moment, my cat's trying to get in on this. Yeah, look on the screen. At the moment, I don't think that there's a platform that I would want to trust with putting a couple $100,000 on it and uh running with it. I think Mogul's getting close to that. I'm pretty close to just saying like that platform makes perfect sense. I think it is the one that more and more for a beginner, for somebody who's just looking for something that looks like a pure real estate investment. I guess I'll go. That one I think sits kind of in between as far as your ownership interest in the other two. Right? It's set up as an investment club. Each individual property that they bring to the platform, you get to decide, do I want to buy into this one or not? And so each individual one is set up as an investment club that buys one property. Uh, but most of the decision making is done by the mogul team and a third party property manager. We get rents, and that's what yesterday I went through. The rents I earned on that, on all my properties from there last month. But so every month you get your rents paid out. um, there's a plan, to hold for 5, 7, 10 years, whatever it is, and then we'll expect an equity payout when that happens. But for the only things we're really going to vote for on that is if it comes time to refinance, whether or not we'll do that. If it comes time to sell it, whether or not we'll do that. But none of the day to day sort of operational stuff, we're not involved in that really at all. So it's a much more passive platform. It's one where you do get a K1 for each property. So your ownership interest is very much like, it feels a little bit more like you're in a syndication, except you're not, because you do get some rights as far as decision making. Where, when you're a limited partner in a syndication, you basically get to decide nothing. I mean, depending on how it's set up, but
Yeah, I think I think a lot of your even your comments that you or replies on the school community, and even if people don't know it, you're pretty active on X, so go follow Joseph on X. But I think what I always like about a lot of your commenting and whatnot is you're always very cautious, evaluating deals, the way you run your numbers, and even I think I posted something about out of state investing recently on X, and that was one of your replies was like you've seen a lot of people lose money, just jumping in on these out of state markets, thinking the numbers work, and they're not looking at other scenarios or other factors included. So maybe touch on that a little bit. Like, how do you compare to just traditional out of state investing and like fractional real estate, maybe?
yeah. So, and I did appreciate that post, right? And I think that it is, because my day job, I'm a real estate agent in San Antonio. We do, my team, we do is work with investors. We get, probably 80% plus of them are out of state, and so a lot of the clients that I have are someone that, um, bought through a wholesaler or bought through some other agent who really doesn't know about investment properties, and so they're in a part of town that their property is never going to work. Or they bought a property that's in much worse condition than they thought, or there's all these things that, I've just seen over and over again. And so even though my clients are all out of state investors, uh, I don't think it's for everybody, right? I think it's something that, one, I think it's like the people that do it. I think you should have on average, you should have a better product, your property, right? Like you should be looking for better neighborhoods, better properties where you have less turnover concerns, less repairs and maintenance, because you can't run out to the property every time there's a problem. You're having to pay somebody, you're less hands on. And so, I think that's a big part of how, what's developed the way I look at the risks of these situations. Um, it is, I think that depending on which platform you're on, you're either making it worse, like, so for example, I think on Lofty, uh, so on average, they sell their tokens initially at $50. Right now, the average token price is $35. So on average, people have lost 30% of their value on that platform. That's a lot of it they've addressed, and like are trying to get better properties, although not really succeeding. So the opportunity on there, is buying those discounted properties in my mind. And I think that that's, it's a way that you can really mitigate risk, is by, buying with a really deep discount, so you have a big equity cushion. But from a operational, viewpoint, it's much more risky, right? Because you have no single person who's really vetting the deal, right? You have 100 people that might be put, and I just say 100. I mean, it could be more than that. It could be, so, far fewer. But you don't have anybody who's like, it's really their baby, right? Like it's a very decentralized. And so, you end up with people dumping properties onto that platform that nobody would buy in real life if they had spent the time to like go walk the property and whatnot. So I'll give you one example, and it's one that I'm buying, uh, tokens in now, but I'm buying them at almost more than a 50% discount from what they brought to the platform. It was a property that was it was a duplex, and it was one bedroom, one bath on each side. It's not zoned for a duplex, but I think it maybe had been grandfathered in, and and it's in a market. I'm trying to think, is if this it's either Memphis or St. Louis. It's in one of these markets where you attract a lot of out of state investors because it's a low price point. But it's a very tough market to rent in, like as far as from an occupancy perspective. Um, Not as bad as Pittsburgh, but
Oh, come on. That was
no, I know, but I think of a lot of these markets as the same in my mind, right? But I know it's no, I think I'd probably rather be in Pittsburgh. But somebody converted it to a single family home, but their conversion was they punched a hole through between in the wall between the two kitchens and kind of made it one kitchen, made it a kitchen slash laundry room. But like the pictures when this was listed on the platform, show the rooms. It looks fairly normal. It's not until somebody did a video walkthrough. We had an agent go and do a video walkthrough for us that I realized like it's not four bedrooms. Three of the bed or two of the bedrooms you have to walk through other bedrooms to get into, or like people are walking through your bedroom to get. Like it's not no. I don't think anybody that's looking for a four-bedroom home would ever rent this, but it kept getting listed and for rent, and like it would be for rent for a long time. They'd lower the price, they'd get a tenant in there, the tenant would move out on their own before getting evicted. Happened a couple of times in a row, and like nobody really understood, like, well, why are we having this problem with this property? Well, yeah, nobody on the platform had ever walked through it. It wasn't until we got an agent to like go do a video walkthrough for us, that it made it really clear, like, oh, that's what's wrong. It's not really a four-bedroom, two-bath home. We can't keep marketing it as four-bedroom, two-bath. So you have these sorts of issues where um, you don't have good boots on the ground, or they're not properly incentivized. I think that's getting worked through now, because you have to realize all of these platforms are still in their infancy. Like, the ones that have been around the longest, well, like Ground Floor has maybe been around 10 years, but they're a little bit different. But most of them are, 3 or 4 years of operations, not much more than that. So they're figuring some of that out. But, one of the things that I find on, so for example, on Lofty, especially because it's so decentralized, there's no single person that has enough economic incentive to really spend the time on it to vet things well. And so it's important to have, we're now having where there's property managers that are also owners in the properties. And even though they have, maybe a very minority stake, at least they, we have someone who's got a little bit more insight into the property. So I think that reduces the risk a bit. Well, I think one of the reasons I like Mogul a lot is because you have a team of professionals that are picking the properties and have picked the markets and are interacting with the property managers and making the day-to-day type decisions. And so I think from that perspective, there's a lot less operational risk there. But you have the, like, to me that seems a lot safer. Like if I were brand new and I had to decide, okay, am I gonna take my whatever I was going to use as a down payment in one property, and I could break that up and buy 10 different properties on Mogul. It seems to me that the buying a piece of 10 properties on Mogul is a much lower risk than me YOLOing my life savings into my first rental property. Um, Depending on, I think I say that it depends on what your first rental property is, right? I still think for most people, a house hack in the market they're already in is probably the lowest risk, lowest barrier to entry way to get started in real estate. It's how I started. Um, you have to live somewhere anyway. You're theoretically your loan officers doing an affordability check on, can I actually afford this property, right? So I think that that's probably still the cheapest way, or not the cheapest, but the lowest risk way to go. As long as you do pick something that your income just covers, you don't need those rents to make it work. But beyond that, like if I were to just go try to pick a market and invest in that market, somewhere remotely, or I was going to go and take the same amount of money and spread it across two platforms and 10 properties. I think the more diversified one, where hopefully I'm picking platforms where there's a professional that's, you know, has some insight into what they're doing. I can imagine that being much lower risk. But if I'm just logging into a site, clicking the button, saying, "Look at that picture, look at this yield, I'm going to buy that one." Well, no, that's much more risky. Like I would, if that's the way you're using the platform, I think they're extremely risky. And unfortunately, that's how a lot of people are using the platforms.
Before we get to Dylan's question for you, I know you mentioned a little bit earlier about people maybe on average have lost maybe 30% on these platforms. Do you see it from more of a because of the tenants or there's maintenance issues with the properties? Like, is there kind of a maybe
And,
specifics on
and
that?
so that's specific to Lofty. That's not across all the platforms in general. That's on Lofty. The average token is down about 30%. It fluctuates. It might be 28 or 26% today. And they might have gotten some cash flow in the meantime, so they haven't really lost that much. But some of them are down. I bought tokens in one property today, or not today, this week for $8.50 that were originally $50 tokens. I have already sold out of those tokens at around $14 a piece. So there's that opportunity there. But no, to answer your question, um, I think a couple of things. One, I think people dump properties onto the platform that are not good investment properties. So the price that the properties get listed at are based on appraised value, and then they let people actually sell their equity on there for up to 5% over appraised value, and it's turned into almost everybody just sells for 5% over appraised value. uh, this makes no sense as a real estate investor, right? Like I want to buy a discount. I want to pay less than appraised value if at all possible, right? I certainly don't want to pay more. So I think that's part of the problem. But then two, you can't just pick any random property, pay the full appraised value, and have that be a good investment property, right? I mean, there's homes that the highest and best use is for it to be an owner occupied property, not a tenant occupied property, because of rent to price ratios, because of occupancy in the area, for all these different reasons. And so I think that's the number one reason. I think the average property that's brought onto that platform it's a property that should never have been an investment property to begin with. Their stated criteria is we'll let you list anything that's legal on the platform because they're a marketplace. They're not trying to judge that at all. But new investors on the platform don't get that, right? They think, oh, this is an investment platform. Obviously, these are good investment properties, which is just not right. So you have that, but then they've been primarily in markets. They have a whole bunch in like the Akron, Cleveland area. They've got a whole bunch in Memphis, a whole bunch in the Chicago ones are actually some of the better ones, even though they have some in like pretty rough parts of Chicago. And I say better, I mean, most of those have still lost money too, but they're not nearly as, but so they haven't picked markets that would be markets that if I'm going to go out of state to invest, I want a growing market. I want a market where there's strong occupancy. I'm not just looking at what's my rent to price ratio, but they very clearly just looked at rent to price ratios and nothing else when the stuff that got onboarded. And it's because you had a lot of novice investors that thought that's all that matters, right? What's the rent? What's my price? What does my cash flow look like day one? Not thinking at all of, okay, what's turnover look like here? What are tenants' rights like? Can an eviction take 6 months? Like all of that stuff, the average investor on that platform is not thinking through. And so they picked some of the worst markets. They picked the worst neighborhoods in those markets, right? They just were chasing the highest rent to price ratio. And like here in San Antonio, I always say we're not a very high cash flow market, but there are plenty of neighborhoods where you can buy, and on paper, it's a really high cash flow market, but it's going to operate very much like a lot of these markets where your turnovers are terrible. Your average tenant's going to trash the place. it's going to take 6 months to fill it back up again. Like those exist. I just avoid them here, right? Like I think every city has that neighborhood or some of those neighborhoods, but because the way the properties were shown on the platform, they were always brought to the platform with a tenant in it. And so you're just looking at, okay, this is the rent right now. This is what we're paying for it. And people would just do static numbers, and not really think about one of the things that they have a lot of like properties that are like 80 or $100,000 properties, and have $700 or $800 rents. And so, okay, I'm hitting a 1% rule, right, on some of these, but the first time I have to replace the AC, I've just wiped out 2 years of cash flow, right? And that's the sort of thing that they didn't really think through, right? All they looked at is the static yield in your year one cash flow. And uh, I think it's a big mistake that traps a lot of new investors when they're going to markets that are not, that they don't live in, right? They All you really have is a spreadsheet, and so they're not looking at the reality of maintaining that property. I mean, one of the things, and this happens here in San Antonio. There's a lot of parts of town where, like, for the most part, I don't think it's really investable if your monthly rental rate for a single family home is less than $1,000. Like, it's really hard to no matter how good your margin is on that thousand, it's really hard to cover your capex and your repairs and maintenance. When so I mean, when you replace a water heater and it costs you more than a month's rent, more than a couple months rent sometimes. I mean, that's stuff that's just like you're doing that all the time. And so I think some of the properties on that platform will have like 300 or 400 bucks a month rent, and that, like, you're never going to save enough to replace your roof with that kind of rent. It's just um but if all I'm looking at are numbers on a page and I'm concerned with percentages, that stuff gets lost on people.
Yeah, like I said, a lot of people in paying attention right now, I think, came from the school call with Zuber and Coach Carson, and I think a lot of what you're saying is exactly what Coach Carson was speaking on. That you
Oh,
touched
interesting.
on, yeah, like house hacking is the kind of cheat code, is a great way to reduce a lot of risk to get started. A lot of people just run things on a spreadsheet. They're not looking at other factors involved. But Dylan does have a question. It's a little bit so it's not related to fractional real estate, but Dylan is a newer agent and he has says, "Hey Joseph, I'm trying to grow my investor client base as an agent. Any advice?"
Yes. So the number one thing I think is, you have to, when you're interacting with your clients, your goal should never be to sell them this property. Your goal should be to sell them their third investment property. Um, so I spend so much time telling people, don't buy this deal. This is not the right deal for you, because you build an incredible amount of trust that way. And if you have a client that buys a property and they lose money on it or it doesn't go well, they're never coming back to you and they're never referring someone to you. If you have a client where you're only helping them buy deals that really work, and of course I'm going to have some misses, right? I'm a human just like anybody else. But if on average the deals they're buying from me are better than they're going to get somewhere else, they're going to refer friends to you, they're going to buy additional deals. Um, it's very common for me to have a client buy their first investment property from me, and then to just buy properties from me forever. But if you're just focused on, okay, I need to make this next sale, it's almost always going to turn into, you're going to want, you're going to push for a suboptimal investment decision, because you know the vast majority of investment or properties are not good investment properties. And even, I but I really think so. Like, because I work with a lot of out of state people, I take a lot of video walk, do a lot of video walkthroughs. And most people, if you have an agent that's out of state, they send you a 5-minute walkthrough. They'll try to highlight all the things that they like about the property. On average, for a single family home, I'm going to be in there at least 15, 20, maybe 30 minutes. I'm going to try to point out every single thing I can see wrong with the property. Because if we get that under contract and then we go to an inspection and it's like, wow, all these, we have all these problems, um, all of a sudden you've lost credibility with them. I don't want there to be surprises, right? And so I'd much rather, know what the problems are up front and maybe make some real low offers on that, or just move on to a better property. So I think, really thinking about it in that way, right? And it's hard when you're a new agent, right? Like, cause I have 4 agents on my team at the moment. Some of them are very new, and I'm always telling them, no, this is not, it's not about this deal. It's about that long-term relationship with that client. And when you're new and broke, it's a super difficult mindset to get into. But it's really magical, because once you start to get, once you do a good job for a few investors, that snowball just goes. And I mean, that's the only reason I have a team, is I started getting so many referrals and repeat business that I couldn't keep up on my own, and I just had to hire other agents to service that business. Um, I don't do any marketing. I mean, I'm on social media, I'm on X, but like if you look at my X account, it's mostly me posting sandwiches and, just random stuff. Like, I don't have any. I have zero marketing spend, except for I do have a premium X account. I have a bigger pockets account. That's something I'd post a ton on the bigger pockets forums. And then understand that, like, most of the people that find you through there, you're going to have to re-educate them on like what real life deals look like. Um, but yeah, I mean, and obviously this is stuff I love to talk about. So if you want to, was it Dylan? Feel free to reach out to me. I'm happy to talk about it. And
No,
but yeah,
yeah, I think I forget, maybe the last live we did, I think you may have mentioned it too. I think I had um Alex Deacon on. He's kind of the guy we work with in Pittsburgh, and I think you may have commented something, you like what this guy says, or said, or something like that.
yep,
But exactly to your point, I think that's why I like working with Alex, and we also work with Jeremy Taggart in Pittsburgh. But these are guys that are probably at a point where they don't necessarily need the money, in a sense,
hmm,
like they don't need to make these deals anymore. And like you said, yeah, when you're new, it's kind of hard. Sometimes you need to make
right,
these, but that's why I like working with these kind of established individuals, where they're looking, like you're saying, they're looking at the third and fifth deal that they're going to be working, and not that first deal that they're trying to just sell us anything to get
right.
that paycheck. So all great points. And yeah, Dylan's a smart guy, so I think he kind of would take that to heart. And I think he just closed on his first commercial deal as an agent. So
Oh, nice.
congratulations to Dylan. But yeah, let's get back a little bit to fractional real estate. So is there any, let's see, is there anything like maybe, I think I just saw something on, Trump passing some crypto policies and bills and whatnot, or is there anything like government wise or policy wise that could impact fractional real estate type of things?
Yeah, absolutely. And that's what the real, it's one of the things that's kept a lot of people from jumping into the space, is the regulatory risk. So you have, like, the biggest provider right now is Arrived Homes. I don't talk a lot about them because they're selling actual securities. They sell them through a broker dealer. Each property, they create an entity, break it up into, fully, just like they're selling stocks basically, and using a broker dealer. And I think that model is the safest from a regulatory perspective. I mean, at least in my mind, obviously this is, I'm not a securities attorney, but it's incredibly expensive. So none of the people that are doing that model are selling deals that I think are good deals. So, like, you have Arrived Homes, and then you have like probably 10 other companies that I just refer to in general as the Arrived clones. Like, they're all basically the same platform. A lot of them are even selling through the same broker dealer. Um, One thing that could make that model work all of a sudden is if there was some legislation that made it so you didn't have to do all the same sort of SEC registration for a single family home. Like, it looks the same for a single family home as if I'm trying to list stock in a company, right? Even though this is a much simpler business, it's an it's an asset heavy business. You shouldn't have to jump through all the same hoops, but at the moment you do if that's what you want to do. And then all of the other all the other platforms like are operating in some either loophole or safe harbor or some niche that's carved out of having to register your securities. So like Lofty's DAOs, they're just decentralized autonomous organizations. Everybody's an owner that has voting rights and is like there's not, so it fails on some of the, at least this is their position, is that it fails on the tests that make it a security. Well, part of the we talked about how it's like herding cats and it's not necessarily the best way to make decisions for your property. Well, if they didn't have to have the setup that they do to try to avoid having to register their securities, well, then you could have the situation where you had a lot more control. And so there, there's definitely rules that could change on that front that would make that much more attractive. It's also possible that the SEC could come in and say, so there, and this is actually confuses a lot of people. So there's DAOs, the DAOs as a general thing, but then there was one DAO that was called the DAO. That was like the name of it. And the SEC said tokens in the DAO are securities. And so a lot of people see that case and think that means all DAO tokens are securities. Um, which is not necessarily the case. It had, is very specific on how that one was run, and so you could have things go either way, right? Like you could either have it become more lax, where you could have way more freedom in how you set up the ownership and voting and control, and still sell those interests without being securities. And that I think there's a lot of people that think that's the direction this administration is going to go. But you could have the exact opposite happen, and where uh, they try to just rope in more and more of these people that are trying to operate in safe harbors or loopholes or whatever they're doing, and say, no, you know what, we're just going to treat you all just like you're selling stock, and now you're going to have to jump through all these hoops and pay these extra expenses. I think that's a real risk. I think the more we see whole platforms just losing money for investors, the more you see that, I think the more likely it's going to be that the government feels like they have to come in and act like a watchdog. So I really hope that that doesn't happen, but I think that's a risk. Like I mentioned Mogul earlier, they use what is, their main protection basically is what's called the investment club. I can't think of, I don't know if it's a safe harbor or what, how they refer to it, but it's, that's why they're not registered securities, because there's been this rule since like 1933 or something, that if you had an investment club and it was limited to a certain number of members, and these certain criteria, that you don't have to register it the same way that you do. And obviously this is just me reading all the different sites and trying to understand like what the, why they think they can sell the interest they're selling in the way that they are. But yeah, there's certainly risk from that perspective of, okay, are we going to see the SEC come in and try to just over regulate all of these? But I think there's also the potential upside of, if you just had um, a new type of registration for just fractional real estate entities, um, that made it so that it was much easier to list, property interests versus business interests. Like it's just, it doesn't make a lot of sense that I'd have to have the same level of disclosures and information, and to buy a piece of a single family home and a piece of Apple, right? Like I mean, it's stock, which is like multi-billion-dollar company, or maybe trillion, I don't know, but like operating on every continent and whatnot. Like it just doesn't make sense to have similar hoops to jump through. But right now, that's sort of the state of things if you want to sell it as a security. And I mean, there's, obviously there's different levels, right? Like they have, depending on how publicly you're selling them and whatnot. But yeah, I definitely think there's the opportunity for things to get better for us, but there's certainly there's risk that goes both ways, basically, or risk and upside, depending on how the government decides to look at this going forward. And it's one of the reasons why I'm really working hard to try to build a community of like people. I've talked to a lot of the founders of a lot of the platforms. I think like at some point we're going to need lobbying for fractional real estate, and people should think about like, okay, not that I'm just going to try to operate in the way, just sort of bend my business model to the rules that exist now, but all start to think about like, well, how could what rules could we tweak that would make it so we could operate much better. Like when I talk to the guys at Lofty about like, why don't you try to attract better properties to the platform, they really think that they have some regulatory constraints that keep them from doing that. I don't necessarily agree with the way that they're, I think there's workarounds, but that's their main, argument or excuse when whenever I'm asking like, why are you just letting all of these, what I think of as trash properties, like clearly just not good investment properties? Why are these the ones that we're putting on? And they're just like, well, if we start to pick ones, then we're acting as an investment advisor, or maybe, they're doing these things that it becomes, there's more likely that it's going to be deemed their tokens or securities. Um, and I mean, I think it's good that they're being prudent in their business model, but it's really hurting the platform to just have basically no filter, other than they're like, well, the market's going to be the filter. But clearly the early investors that they've attracted to their platform have not acted as a good filter either. So I don't know. I think that there's you can tell I really believe this is going to be a big industry going forward. I think I wouldn't be spending the time on it that I am if I just thought that it was, well, I don't know, because it is a lot of fun too, and I'm making good returns. But I think that uh, we really have an opportunity to, well, one, I've got the chance to interact with a lot of the founders of a lot of these platforms just because I have a small YouTube channel, but nobody else is really talking about it, right? It is, and so I think we have the opportunity to either just let the industry be created by mostly like crypto bros, and then it ends up getting, we have all these weird platforms that don't make a lot of sense for investors, or we can kind of push for a more like actual like real estate underwriting model, like actually putting good deals on these platforms. And then maybe to get more platforms like that, maybe there has to be some sort of regulatory change. And so that only happens when you get the sort of a concerted effort from the community. Obviously we're not there yet, at least not any effort that I'm putting in, right? But it is I think it's where we have to be thinking about going forward, right? Otherwise, um, the other option is, okay, I'm investing in deals that I have some plan of, I could just buy this from the entity if things go awry, right? Like I think about that a little bit with some of the deals that are just so bad or that are run poorly, that maybe the opportunity is just going to be, when this really crumbles, I'm just going to buy that deal from the entity, and I'll I'll be first in line, and I'll know everything about the property already. So
All right. So this has always been a fun time. I always learn a lot of information. Like I said, Joseph does have a YouTube channel. So go check it out. But before we wrap things up for this Fractional Friday, Charles does have a question for you. He says, please ask where a newbie should start investing this way.
So I'm never going to tell you where you should start investing, but some of the places where I look, I'll tell you the 5 sites I'm currently invested on, in the order of how much I like each one. So Mogul's my favorite at the moment. I think that it's very easy to understand what you're getting. Um, After that, and that's mogul.club. After that, it's solslot.com. Even though they're very new, I think that your position in each property on there is very similar. And so if once you've taken the time to really understand one deal, uh, it's the same deal over and over again. You just have to figure out how saleable each property is. Obviously, you need to do your own due diligence on every single property. But that's the next one. Lofty, it keeps moving down for me. I think probably the next one is ground floor. That is actually you're buying pieces of mortgages. They used to be my favorite, but they've done a few things that we can talk about some other time, that makes it less so. But I think again, from like just a ease of understanding, and I think you could buy, like, my strategy on that platform is I buy a little piece of every single loan that they list. I think you can do that and have a relatively good risk adjusted return. Again, just my opinion. I've only been on that platform for 8 or 9 months, and so could certainly be wrong. Then I think is probably next is Lofty. Um, that's one I would spend a lot of time lurking in their Discord before I pulled the trigger on anything. You do have to buy one token in a property before you can get into their Discord, or just talk to somebody and we'll send you an invite. It seems like you don't really have to have a token, but that's how you get the invite initially. But yeah, it's definitely, I think it's one of the best platforms to really learn about real estate, because there are all these there's an active Discord channel for each property. You can talk to the other owners. You can go back in time, like scroll up and see like everything that went wrong with each property. So I think that's the best learning tool right now. And it is, if I had, if you have a small amount of money to invest, there's a lot of opportunity because of the way that pricing moves when you buy. Uh, the more money you have, the less effective that platform is for you. Um, I'm also on Collab Homes. uh, I don't necessarily love them, but I said I'd mention all the ones that I currently invest on, and that's them. I guess I think the arrived homes and arrived clones, I think all sort of, because they're set up to try to be like the lowest risk. Um, but the reason I give you the little air quotes on that one is they're not great deals. So if it's, in my mind, like their stated returns are not very high. So then, like, okay, is it a great risk adjusted return? I don't know. But that's sort of the, if I were a new person looking at this, I sort of the approach I'd take. I think I'd go in that order. I think you can learn a ton looking at the mogul deals, like the deals that they're bringing to the platform. They clearly understand, short-term rentals and pad splits, those two business models well, and are picking properties that I think, you'd have a very hard time putting together a small team like theirs and go out and find better performing properties in the same markets that they are. I think. I mean, we'll see again. All these are pretty new.
And I guess that's kind of a second part to his question was, and how much? Is there like maybe a base amount you would start with to really get a feel for a property? I mean, a platform, I should say.
So one of the things that I didn't think about initially, but is important, is this is going to complicate your taxes a little bit, depending on which platform you're on. And so, like Mogul, you can make a minimum investment of $250 on there, but you're going to get a K1 at the end of the year for each property, right? And so your accountant might charge you 25 or 50 or $75 per K1 that they file, for that they handle for you. They might not, if you do your own taxes. But so one of the things that I at first I was just making very small investments, really trying to play. And on there now, my minimum investment has become $1,000. I think that's uh I don't think you have to do that. That's because I'm like, I want to make at least enough to cover the extra cost of doing my taxes, and it's going to much more than that at this point, I think. Um, but that's one of the things I hadn't really thought about. But like on ground floor, you can buy $10 at a time, and there's no reason to not do that, right? Like my average, I'm buying a little piece of everything that comes up on there, but I'm only putting $50 in each one, right? It's letting me experiment and learn, and still get really wide diversification, right? I don't think you have to do that, right? You don't have to. I mean, you could put $10 in every one if you want to do, or you could be really selective on that platform. On Lofty, again, like you can put a really small amount, and they do just give you one tax form that like smushes all of your properties together. Um, Whether or not that continues, it will be interesting to see, because I don't know how that. I don't. It doesn't seem to really work the way they intended. Um, we'll see going forward. But so on there, because that's the only the additional, like, you know hassle of dealing with your taxes or costs is the only reason that I'd put some minimum on what you need to. Otherwise, as long as you have the minimum, price to buy each token or each share, I don't really think it matters, right? I think that what I would say is that for me, I wouldn't put more, whatever my investment capital was I had to start, I wouldn't put more than 10% into any one property. And I mean, for me, I'm putting much less than that at the moment. But um, the benefit of fractional real estate, one of the biggest benefits is that you can diversify. And so I do see some people that are like, they just go all in on pick one property and like, that's the property. And it's like, well, I hope you're right. But if you're not, like, why are we doing this? Just so,
Well, I would say go check out Joseph's channel. He has more daily content. So if you want to go see more breakdowns of the platforms he's using, go give him a follow. If you're in the school community, go follow him there. You can also probably contact him there with questions and whatnot. Or if you also want to know about the San Antonio market, reminder that Joseph is an agent. He has a
that
team
is
there.
still what I do as my day job. So yeah, I'm happy to talk to people about that too.
Yep, reach out to him. Go follow him on YouTube. If you're in school, go connect with him. But it's always fun catching up with you, man. Like I said, we'll try to do this maybe every other week. But like I said, go follow him because he's putting out daily stuff on fractional real estate. And go follow him on X. But yeah, thanks for doing this, man. Always learning a lot of information when you're on, man.
Yeah, thanks for having me. It's always fun.
All right, everyone. Just a reminder. And I also, I'll mention that Joseph has been on Jack's Business Talk. So if you want to see an interview with Joseph and Jack, Joseph is over there. I know Jack had trouble saying Joseph's last name, but yeah, it was a good one. So go check it out there. And I will be back tomorrow live streaming with Lindsay and Violetta, someone I haven't met yet, but she's been on Lindsay's channel. So that should be a fun one tomorrow also. So thanks everyone for tuning in and have a great weekend.